you would at least have a vision to your business, and that's why setting a vision, setting your goals is very important.
You need to find a balance for marketing spend, especially.
Sticking to your core, what really uh, you specialize in is very important.
What are the core things that creates a healthy business?
When you are stable and your business is stable, you also have to look at your top line. So your top line is what will really drive your growth. If you don't have visibility to that for at least 2, 3, 5 years, you might struggle in the short and the medium term to achieve your targets. Yeah, that was my first response actually. Make sure you don't burn money. Make sure you're not negative.
Yeah. Welcome to M Business Podcast, the podcast where we talk with real people about real businesses. But today we have a special guest with special skills, and we're going to talk about more educational part of this journey. With me today, Salman Shabb, who is a corporate finance and M&A advisor. And without further ado, Salman, how are you?
Thank you very much, Hussein. Great being here. Thank you for inviting me. I'm very good. Alhamdulillah. How are you doing?
Very good. Thanks for taking the time to visit us.
Sure.
And taking the time to maybe break down some of the concepts about M&A and all that. So I think let's start and dive in right away. So I'm going to buy a small business. Is that an M&A transaction?
Yes, it is. I mean, since you mentioned business, I'm assuming, and again, there's a lot of assumptions behind these kind of deals or transactions, however you want to call it.
Yeah.
But if it's a business, then you are probably looking at something that has been operational for 2 years, 3 years, 20 years, 10 years, depending on the history of the business. So irrespective of the size and the scale, if you as a buyer are buying a business which is operational, it can be categorized under the M&A activity. But again, M&A has multiple models that exist. So it really depends on what kind of a deal structure it is going to be. There's a lot of workings behind it. If it's just in plain vanilla language, if you're buying a small business that's operational, that can be categorized as an M&A activity per
All
se.
right. Okay. And so let's start from the beginning. For example, I'm a person that's going to start a business. Maybe it could be a startup, it could be a classic business. So from your part of the world, where should I start setting up my business? So I have an idea today, and I want to validate it. So what do I do first?
Brilliant. So I think as an entrepreneur, firstly, you should be very proud that you've decided to go on that journey. You as an entrepreneur, as someone who has some capital or will be raising some capital, you will start from your market. So where do you want to launch your business? Where do you want to start? You would have something called as TAM, target addressable market, in your mind. You will do that analysis, and you will capture those thoughts into a document or a presentation that you would like to take to your investors. So basically, that's where you start. I mean, that's the fundamental of anybody starting anything. The location, the target city or the country that you want to start in. What is your addressable market? What are your demographics? So when we say addressable, these are the people who are your demographics, the people who you're going to sell your product or services to. And then comes the whole feasibility side of things, where you're going to evaluate whether this business really makes sense or not. Right? So because you're a startup, you will not have access to a lot of things. You will not have access to suppliers who will give you volume rates. So you will have to sort of take that hit in the beginning, where your suppliers are going to charge you a premium, but from a long-term perspective, that's going to create an economies of scale. You're going to have these same suppliers who are going to provide you better rates at some point. And then you will obviously look at it from optimizing your cost perspective, but at the same time, when you are stable and your business is stable, you also have to look at your top line. So your top line is what will really drive your growth, and eventually,
So
one
what
day,
is because we always mention top line.
yeah,
What is top line for in a simpler terms?
it's something that you sell, whether it's
Okay.
a product or a service, and you get money for that in return. So
So it is what
that's
you
your
sell.
top
It's
line.
your product is your top line.
Your product that you sell or services that you sell is your top line.
And the opposite is your cost, right?
And the opposite is your cost. So whatever your cost of goods sold, we call it, or direct costs related to the product, would be your sort of cost. And obviously you will have certain fixed costs, which is, things like, I don't know, it could be your rent, it could be, however, like people can categorize fixed costs also in different ways. But there are fixed costs, there are variable costs, your utilities, electricity, your salaries, things like those. And then, ultimately you have something called as operating profit or EBITDA, earnings before interest, tax, and depreciation, amortization. And then you have your taxes, if there are any in your jurisdiction, and then you have your net profit. So I mean, so I just described the P&L
Yeah.
in short, but basically it's a very important sort of metric or an important evaluation for anyone who's starting a new business.
Yeah.
If you don't have visibility to that for at least 2, 3, 5 years, you might struggle in the short and the medium term to achieve your
Yeah.
targets.
Now we speak a lot about feasibility. Every time you think about starting a business, there is a lot of advertising that starts chasing you.
Yeah.
Feasibility. I'm selling you feasibility. I'm selling you feasibility. So you within the feasibility uh, is the information that you just described. So
Describe,
like the
yeah.
addressable market and all that.
Yeah.
So what before I go to an advisor to do a feasibility, what are the things that I should give him? Yani, what would he ask me?
Basically, I mean, the fundamental thing is, what's your objective? What do you want to get? So let's just say that you want to buy a product or a real estate. What is your objective? Do you want to sit on it? Do you want to use it for yourself? Do you want to sell it? Likewise, the same things an advisor will ask you is that, what's your objective starting this business? How long do you foresee yourself running this business? How much of a growth do you want in this business? Things like those. And obviously, these are qualitative factors that will, matter for anyone who is evaluating a feasibility for your business.
But why does it matter how much I am, yani, when I don't want to get rid if I say, okay, I want to be in this business
Yeah.
for the next 5 years, or I want to grow it and somebody will buy or acquire this business from me later on. So how would it change the feasibility?
Look, there are dynamics, right? I mean, if you think about it, it's a great question. And to be honest, it's very subjective. So today, people are in the race. So, you'll see a lot of these engineers and a lot of these youngsters who come out of university and they don't want to work. They don't want to work in Google, or they don't even want to go to Amazon. And like they forego these opportunities because they see around them, their environment. There are a lot of people are starting up, and even though they're failing, they want to start their own business. They're willing to take that plunge, and rightly so. I mean, at that age, I wish I would have taken that plunge, right? So it really depends on what stage of life you are at, how much of a risk taker you are. Maybe today what you see that can be acquired down the line, maybe that might not happen, and you might not find investors, and you might be burning cash, and you might have to shut the business down. But at the same time, you would at least have a vision to your business, and that's why setting a vision, setting your goals is very important, and that qualitative aspect should always exist. That's what defines the entrepreneur, right? If you don't have that passion, if you don't see the vision, then I mean, you might as well not sort of go ahead with your plans. So that these are the qualitative factors that matters, and there are quantitative factors, obviously, with your capital. How much do you want to invest? What's your appetite like? So these are the two factors that, to answer your question, an advisor would ask you for.
Yeah, I like that. Specifically, that I've heard a lot of talks about how setting up a business as a startup or a normal business,
Yeah.
or a classic business setup is different. And sometimes a startup, when it fails, it fails. You can no longer convert it. Is that true, or is it a myth?
You see, I mean, it depends, right? It's again, you'll see some of the really successful companies in the world have crashed, and they have sort of been able to sort of rise up again.
Mm.
Whereas some companies that you probably don't know if they exist or not. Like I'm talking about the Yahoos of the world, where you first you could never imagine while growing up that there won't be any Yahoos
Yeah.
in the future. So likewise, I mean, there are a lot of these examples that you could come across, and it really depends on the entrepreneur himself or herself. Like I mean, if they're not passionate enough, obviously. If something's failing and they're not able to sort of reboot it, revamp it, and I don't think that anything fails all of a sudden, right? There's
Yeah.
always a crippling effect. So it's something that you would have done in the past that you've taken some bad decisions which have
Yeah.
led to your business crumbling
But could
down.
it be a lot of this subject was always around raising too many funds,
Yeah,
or burning a lot of cash that you raise, and then they don't translate into actually revenue eventually.
yeah. That could be a possibility. Also, like we've seen some examples. So I come from India, where a lot of these startups have reached you know, uh, the level where they've raised so much funding in the market, and they don't know what to do with the funding. Honestly, they initially thought they will do an IPO, but then they don't want to dilute any further than they've already diluted. So that I think there are the pros and cons to it, but yeah, I mean, it really depends on again, how uh, sensitive and how smart you are utilizing those funds.
Mm.
Because you can't just so one of the things about startups is that you just keep going at a pace, and you lose sight of what your real objective is, right?
Yeah.
So stick to your core, do what you're supposed to do, and don't just try to overachieve or things like that, and things work out. Otherwise, like you said, they can crash and they can fail quite easily.
All right. So going back to our the rest of the world that don't do startups and doing classic business, let's say, I've done my feasibility. So I went to the advisor, and he gave me a feasibility. So what do I receive? Do I receive a plan? Do I receive that just a tick that you're doing a good job, or what do I get?
Yeah, I mean, so feasibility is usually uh, it's a pre-launch stage, right?
Yeah.
Where you're actually just testing the market, if there's market for this product or not,
Hmm.
right? So
But then why do they always suggest you do a feasibility regardless of any business? Even if it's a classic business, for example, I still need to do a feasibility.
yeah, I think you should do it even more so. You should do it if it's a classic business, because that means that there's enough supply in the market. So
Hmm.
the fundamental about a feasibility is not just cash flows, right? You basically you start from your demand and supply. You see
Okay.
what your market entails, and what are the white gaps that you can fill in as a startup.
Okay.
So if you don't have that sort of visibility, especially if it's a saturated industry, right? I don't know, car service repair showrooms or
Yeah.
whatever, service centers in Musaffa. We are in Abu Dhabi, so just give you a local example. Uh, I wouldn't open a car service center in Musaffa because there's like
Yeah.
abundance of them, right?
So
But at the same time, you would also have to look at what are the influx, or what is the number of people, how many people will be residing in Abu Dhabi in the next 5 to 10 years. What is the number of cars on the roads right now? So you do all those top down analysis, and then you actually come down at a demand supply gap, and
hmm.
then that supply gap should actually give you an indicator of whether you should actually move on to the financial side of it, or you can just stop at the market assessment. So these are all stages that I'm describing for a feasibility. So you start from that market assessment, and then you eventually come to your financials to understand whether it will generate money for you or not.
All right. So I did my feasibility. I found my market gap. I know my addressable. I know my budget. So now I launch my business. How do I make sure if my goal, for example, is like to make as much money as much money as possible, and one day make it ready to to pass along. But let's say I started my business. What are the core things that creates a healthy business? Like for you, when you come and you're gonna assess this business, you'll say this guy did a good job. Other than obviously the making enough revenue and breaking even and all that. So what are other things that you think?
Yeah, that was my first response actually. Make sure you don't burn money. Make sure you're not negative.
Yeah.
But look, from an investor's point of view, what really matters, firstly, is the money, right? The financials, whether you have strong financials or not. Secondly, there's obviously you should have a certain market share in your industry, right? So if you are an internet company, if you're something, if you're selling tech related items, I mean, you have to be in the top tier, for someone to come and acquire you. And it's very easily accessible, even for information which is not publicly available, to see what your market share is, to understand how your products do versus your competitors, and sticking to the fundamentals. I think that's very important, right? Sometimes a lot of people just sway away from what their core is, and they'll just try to experiment with multiple products, right? And then they actually forget the way, and they think that, okay, it's a margin business, we get higher margin on this product, we will start selling the other products. So I think sticking to your core, what really uh, you specialize in, is very important. And at the same time, obviously, keep watch of your cost, because ultimately that's what's going to make or break things. So your cost optimization is very, very important, and that will probably dictate what value you will get out of your company eventually.
I like to, يعني, I always believe that at the beginning you should cast the net wide. So, for example, you're a service company and you provide services. Is it a good strategy to start with a lot of services and then narrow down, or it is always something that you should study and be very careful about? And what would be, is it good or bad? What is the impact, let's say?
Yeah, so I mean, look, I've seen, and I agree with you that you should cast the net wide, but it really depends on which industry. Like within a service oriented industries, it really depends on which, like, what is your specialty. Like, for example, in my world, where we do consulting work, right? We go to our clients, and the client can look at us and can assess whether we are capable of doing the work or not, right? They don't even need to see our technical and our commercial proposals. They will probably just say, okay, you are XYZ consulting firm, you're good at strategy, or you're good at implementation, or you're good at just M&A advisory, right? So likewise, I mean, you should make sure that if you are like for example, if you're an internet company, right, you're selling SaaS solutions, right? Software services. You shouldn't be doing, I don't know, something like a social media alongside a software.
Okay.
So you don't, that's what I mean by don't deviate from what your specialty is, but at the same time cast it as wide as possible within your expertise areas. And I'm sure that you would probably identify that, okay, you probably started out with something in mind, but you actually excel better in the other area, but within the same bucket, and not really going into another area completely. Is what I meant.
So it's important to find kind of your niche, or let's say something
Find your
that
niche. That's where I was heading.
Okay.
And that's what I would do.
No, because at the beginning, if it's a startup or it's something new, I guess everybody that start a business, or they do it because they actually, entrepreneur wants to try something new. They don't want to copy whatever is out
Existing.
there. So the trial and error, kind of expensive experience, sometimes, because you do lose a lot of time experiencing that, and that's why one of the things you talk about always is that why don't you buy a running business that already experience some things, and then you can experience more, but you already have your
Base.
base.
Yeah.
But in general, now I start a business, so I spend a lot of money on doing, the brand, the logos, the registration, Instagram account, followers, SEO, and all these intangibles. Are they part of the value of my company?
No, 100% they are. I mean, all your social media presence, everything that you sort of invest in, becomes your inventory, becomes your asset, right? So, um, I mean, you should look at it as if, whatever investment you're doing right now, it's not going to, these are all sunk cost, but then they will they will build the value for your sort of company. And eventually, when like you said, right, that it's always better to buy an operational business. Why would you buy an operational business? The operational business will give you the brand name, the equity in the market, the reputation in the market, and you already have a baseline. So this business generates X percentage margins, and it's a good business to go into because they already have these many customers, these many countries they are popular in, or whatever. So those are the reasons why these intangibles really come into play, especially depending on the industry that you are dealing in. So um, uh, that can actually become your competitive advantage as well. If you think about it, your competitor is not doing it, but you have invested in these intangibles today, and that will generate you more benefits in the future because you invested in these intangibles.
Yes, just because it always comes up that you should not spend so much more you need to find a balance for marketing spend, especially.
Yeah.
The same thing for your Google reviews, right? You see a lot of places that they once you enter, they give you the QR code.
Yeah.
Please scan this for a. I understand
For
that
a
at the
review.
end it
Yeah.
results in customer, right?
Yeah.
This is the drive, but
Correct.
as business owners, we spend so much money and effort and time in in marketing, reviewing the assets, creating it. If you have a small business and you try to do it on your own, but it is actually it's a lot of work, so is there like a value that you put like a dollar number on it, or is it just a competitive or a comparative advantage?
Look, I mean, we'll get too technical if I explain you the logic behind intangibles. But look, intangibles do exist on a like if you see all these listed companies and their financials,
Yeah.
intangibles are actually a big portion of their and intangibles that they include are quite subjective and questionable. But they use there are accounting standards around intangibles and goodwill and things like those, right?
Yeah.
So look, technically these things really matter, but for someone like me who's like an MSME and is trying to buy and acquire a business, for me what really matters is how good, and it's also related to your market share, like how much people know of you and of your business, right? That really matters, right? I mean, why do we see today that influencers are making more money than some of the celebrities these days? Because the views matters, the likes and the shares matter, so all of these things, the followers matter. I think really add up to your brand overall. And the more people know about your brand, whether it's through social media or whether it's even just through your customers, where you're not actually leveraging social media a lot, but a customer will always come to this business because they trust this business, right?
Yeah.
So there are multiple such examples that you can think of where these intangibles will definitely work. It is definitely a competitive advantage as well, but like you mentioned, I mean, it's always the seed that you sort of will always reap you benefits in the future. So I think it's both. I think it's twofold. Uh, Investing in these intangibles.
No, right. Well, I'd like to talk a little bit more about taking over a business or buying a business that is running, acquiring something that is running. We see a lot that يعني when you go to the market and you see everybody puts a price tag on it. So how do I evaluate that it's a fair price or not? Can I do it on my own, or how do I go about it? If it's you have like you want to buy, for example, a restaurant, and you have square foot or revenue and all that, and then you have 7 or 8, and each one has a price. So how do you do it?
No, I think you obviously need expert advice if you're not one. I mean, assuming that you're just going into the buying the business to run it,
Mm-hmm.
right? So that means either you have got the operational expertise, so you know how to run this business, but then you will also have to know uh, the 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 real worth of that business, right? That's what we call the value of the business, right? And to come up with that value number, let's say in your example, a restaurant, whether it should be 10,000 dirhams or 100,000 dirhams worth of a brand, that only sort of becomes clear once you've done your due diligence on what this restaurant generates, right? Uh, so you would have to sort of look for someone who's an expert in making you understand whether what this restaurant business is doing is as per the market or not. Maybe they're not, really aligned with the market. Maybe they're not, you know, where they should be compared to the other competitors in the market. And like you gave the example of 7 or 8 businesses, if you have options to evaluate, more so you should have an expert who's kind of sitting with you and explaining you that these are the factors based on which you should so you can probably develop a matrix, and you can probably understand what are the uh, key points, that key metrics that you should sort of look at in sort of buying this business. One of them is obviously the quantification of the numbers, but the other is also, like I mentioned in the beginning, that it's the market assessment, making sure that you're not paying above market, making sure that they are not inflating their numbers and they are not trying to sort of over value their company, which they would always do, as a
Mm-hmm.
seller would always do. So as a buyer, you should be very cautious of these factors and make sure that you've done your checks completely before you invest in a business, in any business for that matter.
What are these checks? So, yeah, just to be for somebody that is fresh going towards it. Okay, so what does he need to check?
So, let's take the example of the restaurant, right? So, you would have to obviously understand how long the business has been operating, right?
Mm-hmm.
You need to understand what their total footfall is, how many transactions they do single day, what is the average value of the transactions that they do.
Mm-hmm.
You would have to check their sort of bank accounts. You'll have to sort of check what are the numbers that they're actually generating as revenues. You have to check their costs. You have to make sure that there are operational efficiencies in the business, because the restaurant business very operationally heavy,
Yeah.
right? So you have to make sure that you have the right understanding of the business, right? So the fundamentals of the business are very important for someone to understand, which an expert would probably sit with you and explain you one by one. There would be site visits that would be involved. People will these experts would probably ask for details from the restaurant owner that they might resist sometimes to share, right? And then that sort of gives you an indication that, okay,
Mm-hmm.
maybe he's hiding something, or it's not a fair picture what they're trying to paint here. But look, I mean, at the same time, you could also say that the value might be correct and
Mm-hmm.
might be actually undervalued, right? So you don't want to lose out on those opportunities as well. So someone would probably be able to guide you whether it's undervalued, overvalued, or otherwise. And also, basically, like I said, there has to be some sort of leap of faith. There has to be some assumptions that you will have to make to in like when you're really interested in buying that business. So I think it's a balance of both. But these are usually the checks that you would do, both qualitatively and quantitative, in order to buy a new business
All
or
right.
existing
Yeah.
business.
So, but the valuation and the due diligence, are they related, or is it a different stage of that acquisition journey?
It's all, yeah, it is different stages. Obviously, you start from the due diligences, so you basically collect all the required information that you want from the owner.
Mm-hmm.
You make sure that you've kind of used your uh, understanding of the business and the market on it. So you've done proper benchmarking, you've done proper comparable analysis, you've done sort of your uh, checks on, like you mentioned, Google reviews, customer reviews. So in the case of a restaurant, that would really matter, right? So these are all intangibles also that you would incorporate as part of your due diligence exercise. And then finally, you will come up with an intrinsic value of that company, of that business,
Yeah.
and that would be your final value that you can assign and tag to that business, and then start your negotiation process. So it's a step-by-step process. It always starts with the DD, which is due diligence, and then you finally arrive at the final valuation. And there are multiple, like I said, ways of doing valuation for businesses. So once you have proper visibility of that, when you sit across the table of that buyer, of the seller,
Yeah.
he shouldn't think that he can take you for a ride. So that's why all of these checks and balances are very important.
So we will get down to the subject of bigger companies and all that, but I want to focus a little bit about small businesses, just for simplification of it. On the other side of the table, of the buyer, there is the seller. So what does the seller need to do, or in preparation to sell his business? I decided today I want to get out of that restaurant. What do I need to do?
As a seller, you mean?
Yeah, yeah.
I mean, look, firstly, you will have to make sure that all your numbers are sort of, true and accurate, because you don't want to lose, the buyer's interest, that
Yeah.
you're probably just, changing your numbers or doing, so,
But
and
could it be by mistake that the numbers are not accurate
it
for
could be
small
by
businesses?
mistake. It could be, I mean, it could be because they're not keeping track or record of this. And in those cases, that's where, the buyers have to be very smart and understand that this could also work in their advantage. That if there's lack of data and lack of information,
Mm.
you could always go and sort of leverage that as a negotiating point. But irrespective, I agree with you that there could be mistakes. There could be sellers who are not keeping track of their management accounts, and they don't have a proper team, or at least someone who's providing them these services on an ongoing basis, and that's why they don't have the right information. So firstly, I mean, I would probably look for that. Secondly, I would look for, what is my objective to sell the business? Is it just to sort of earn a value today, or can I wait till my um, desired value is achieved out of this business, right? I
Mhm.
can still, I mean, if I'm in a proper comfortable position to run my business, I would probably wait for the right opportunity to come along, and only then let go of my business.
But
uh,
does it mean the right opportunity means I wait for the right buyer, or it means that I have to put more time, more effort to make more money? Well,
Well, I think, I mean, if you, like I said, I mean, people can be at different stages, or at different junctures with their businesses, right?
yeah,
Just like life, I would say.
yeah.
They might be very sort of okay running it as is. They might be ambitious, and they might say, okay, no, till the time I don't get the right buyer, I'm going to keep amplifying, keep injecting working capital, keep reinvesting my money, so that I could grow my business further, and in the process, obviously, my value also increases. So it really depends on where, like, what is the mindset, or what is the headspace of that buyer, of that seller. So I think that is very important to understand for the person who's selling their business. And at the same time, making sure that if you're a very reputable brand, or a very well-known SME also in the market, you don't want to just let go of the business, and then see it, because there are different type of deal structures, right? I mean, you could
Mhm.
still be associated to the business some way or the other.
Yeah.
You could still have some equity in there, and you don't want the reputation of the business go down. And if your objective is to just sell, and you need capital, and you need to invest somewhere, or you need for certain reasons the capital, then you would probably look for a stress selling, or you would probably undervalue your company at points, which is also a norm in the market, by the way. So it really depends on what the objective of the seller is.
Yeah.
But these are common cases which I've just described.
All right. Well, on the platform, for example, I've seen three repeated or majority of the reasons for selling. So if it was you buying a company, which one of you would you look at first? Somebody that says, I want to move out of the country. So he says retirement or whatever, but I'm moving out of the country. I want to sell the business. Another guy says, I don't have enough capital to scale up this business. And the third person that says that dispute between the or disagreement between the owners, for example.
Hmm.
Which one of these three would be priority, and which one of them will be, no, I have to relook at it or avoid it?
See, I mean, from a legal perspective, again, so something that we've not really touched upon so far is the legal aspect of the business, right? So
Yeah.
you would want to ensure, and with a country like UAE, you have really the right checks and the right kind of verifications in place, where as a buyer also you can make sure that the person, the company that you're buying from, or the company that you're buying is legally okay, right? So in the first example of someone who's leaving the country, whether why they're leaving the country would be my first question.
Mm.
But based on the three scenarios that you've explained, I think the easiest would be, um, I would say, the first one and the second one both. Because someone who's leaving the country might be just in a hurry to sell their business, and could be, as a buyer, works for me as an advantage to negotiate better terms. um, uh, as long as, like I said, there's no sort of loans defaults on the business
Yeah.
that would come on your shoulders when you acquire them. In the second case, I would say, again, it's a good opportunity for you to sort of negotiate and say, look, you don't have the capital to scale. I have X to pay you for the company, and you can obviously deploy this money for some other business or some other use. So number two is also might be a favorable option to go for. Number three might be a bit kind of debatable, whether it's a straight up acquisition, or uh, like you said, the owners have a dispute among each other, whether one of the owners will come and create a dispute with you and not let you acquire, or might become a roadblock in your acquisition process. Could be multiple scenarios like that.
Mm.
But you wouldn't want to sort of go into those kind of intricacies. As long as, I mean, if you're like really passionate about that business, then sure, go for it. But I would, as a on a safer side, go for the options one and two.
All right.
Yeah.
And yeah, because it's interesting that it repeats a lot. I guess it's part of the nature of the UAE, right? There is a
Yeah.
lot of expats that come and go,
Yeah.
So a lot of them do establish businesses and they go. On the other hand, there is a lot of buyers that are interested and they're like, I want this specific business.
Yeah.
I guess because it's their experience. So
Correct.
I guess there is a lot of transactions because of the way the UAE is set up or the way it
Exactly.
works. طيب, let's go towards the most hot topic nowadays, which is startups. And because we part of it is just because it became cool, I guess, to be an entrepreneur and have a startup, but also there is a lot of great ideas out there, and a lot of incubators and accelerators in the UAE. When you set up a startup, um, you need to create some sort of valuation when you approach the investors, right?
Yeah.
They'll ask you for a price or
What is your perceived
yeah,
value of the?
exactly.
Yeah.
So how do you come up to that price, or how do you know that this pre-money that you collected is actually the right amount and you gave the right amount or shares of your company?
So I think, yeah, like you said, I mean, there's so much of this buzz on startups, and a lot of these people, like I said, youngsters and young people, especially out of university, who are trying to get into the ecosystem, which is great. And I think some of the very experienced folks as well, you see that they are, whilst they have like full-time jobs, they're trying to focus on creating their startups. So you'll see in the market there's these a lot of accelerators that are going around, and um, what is really interesting is to see the amazing valuations that these companies can generate
Yeah.
without really having um, the real science behind it. So it's astonishing, but again, it really depends on the person who's selling it. But look, fundamentally, what I would probably look at as an investor or as a VC or wherever I am sort of investing would be, you know, if you've actually injected the capex that you sort of so by capex I mean capital expenditure,
Yeah.
which is your capital that you've invested before you start that business. So the investor would be very sort of interested to know how you've deployed that capital. What are the areas that you've sort of invested in? Mainly, I mean, investors would be interested in what kind of tech you're using. Is it, really high quality, good quality tech, which is unmatched? You have a competitive advantage. Those kind of things. Whether you have a product market fit, that's one of the things that the investor would look at. So those are some factors that would sort of culminate into the valuation that you really present to the investors. If you're pre-money, it's a bit hard to put a value. So when we say pre-money is basically when you're not really generating any revenues. But
Yeah.
at some of the startups, or a lot of these startups actually go into have use cases, have sort of agreements in place, or have NDAs signed, or have term sheets signed. If you have certain tangible items like that to present to investors, they'd be very interested, right? And they could probably buy the valuation that you present to them. So it really depends on what the perceived growth of that startup is, even if they are pre-money, even if they're in the very incubation stage. But look, I mean, that's what these accelerator programs are there for, right?
So what do they do then? What's the use of the accelerator? Is it that stage, or that's incubator? Actually, what's the difference between incubators and accelerators?
That's a very good question. I should have read about it before. But look, what I understand from my limited knowledge about this is that you basically, as a government, or as part of uh, even internationally, UAE, obviously a lot of government led initiatives are there for startups, but internationally as well, you'll see a lot of these established organizations who have their own uh, you know uh, incubation programs for startups. Y Combinator out of the US is one of the biggest sort of funding places where lots and lots of entrepreneurs sort of approach, and you will see a lot of these companies. A lot of famous and the popular ones that you see in the market today have come out of there. So it really depends on how sort of you value and you sort of go about your company. But like you said, there's so much of a hype in the market today that you can't take things on face value. But at the same time, these programs do help, and obviously they do a pre sort of vetting of the companies that come through them, so that the investors would have reliability and they can depend on what they are sort of buying,
Yeah.
putting their money in. Yeah.
So I guess being part of them also give you that a little bit of credibility that somebody actually did a check for your idea.
Absolutely.
They tested your idea. There is a little bit of testing, so
Absolutely.
the next step could be easier. Um, so I did a startup, for example, or we have a startup, and we invested the initial capex, so it's bootstrapped, and I ran out of money, for example, before we make that first dollar. But we do have traction. So what are the things that I can show? Let's take, for example, something simple like a SaaS or an application. Um, I ran out of money. I need money to continue or to market my company. How do I show value? What are the things that I can give you as an investor that could make you consider investing in my company?
Um, I mean, you can do a lot of things, right? I mean, you can obviously, firstly, you can start showcasing yourself in these events where you get the credibility with a little bit of investment. You sort of, and some of these actually are government run, especially in the UAE, but even internationally, right? So you can probably that becomes your starting point to actually putting yourself out there, and meeting and networking with people, showcasing your product and making, you know, making them look at it and get impressed by you, by the passion that you exhibit through your sales pitch. So you have to probably do some of that, probably prepare good pitch decks, go to the investors with your presentation on what potential you see in the company. But like you said, you're bootstrapped. Again, that's a very impressive tagline for an investor, right? So you've actually not really raised capital, and you don't have any leverage. You've not diluted any shares of your company. So you own that 100% of the company, and the investor will be very interested to come in and either acquire you fully, or put some equity, and probably be the first one to sort of get 10%, 15%, whatever you offer to them. So that becomes like your selling point. And at the same time, obviously, being true to your being true and genuine to your investors, and making sure that you're not again over promising and under delivering. These are the factors which genuine investors and VCs would appreciate about you, and would definitely invest in your company.
Well, I hope so.
Yeah, inshallah, man. I mean,
And
yeah.
no, but speaking about the technical part of it, right? How can you show traction without sales? Like, how could you show that you found the POC, proof of concept, or the actually, to be more accurate, the product market fit? I mean, does it always mean you made money?
Not really. I mean, like I said, if you've done a proper assessment of what your target market is, and you can back that up with numbers and data, right? Uh, uh, and that's why you need to sort of think of this as something that you're doing out of passion and not just for the money, right? So you're not just going to do. You're not going to find information readily available sometimes. So you will have to like make sure that you go to the ground, you make sure that you get the data to back yourself up when you go to the investors, and you show them this assessment that look here, this is a market. We really feel that this is a great fit for our product, and we can deliver through the product that we are creating. It's just that we are currently at the pre-seed, at the pre-money stage, and we're not launched yet. And eventually the investors would see the value in it. Also, like I said, tying up with some governments, government related initiatives, grants, if you have secured some grants, if you've secured a patent for your software, things like these can also help you go a long way to gauge and to attract the investors. So I think it's multifold. It's not just money. Obviously, money will be the biggest factor, but if it's not money, then there are other factors as well which can come into play.
Yeah. I guess I'm asking that because it's just fresh in my mind that we had a discussion. So one of our friends who actually has a startup, they did the software, so it's a SaaS. They did the software, they did kind of launch, but they ran out of money, let's say, because that's, I guess, maybe one of the reasons is because the development took so long and there was a lot of mistakes. And with tech, there is a lot of
iterations
and all that.
Absolutely.
So reach now to the point where they need the money to actually start marketing, pushing it, and making it to the next level. And his suggestion was to find an investor that will put the equal amount of money as they do, and take 50% or 49%, which I believe would, they should have. That was my suggestion. Like, make a valuation, because I think you over.
Valuing.
No, maybe it's actually they're offering too much of their shares.
Too much of the equity. Okay.
If you put exactly the same amount, then this is, if he's only an investor and he's not running in the business, the equity, I don't think it's balanced. What do you think?
Yeah, I mean, look, it really depends, right? If this person is, really, if he's looking for a co-founder, for example, and if he's looking for a specific co-founder who can come and help him with his tech, right, or help him with a certain area of the business which he's not able to sort of currently get up and running, um, that person could demand a 50% equity of his business. But like you said, this guy has injected all the money from the beginning, and just giving out the 50% of it for the same amount of money that he has invested. It's a bit of an undersell, but it really depends on where he is. Again, I would probably look at it holistically. If he's getting the money that he requires, he can probably go for the deal. But otherwise, what he should probably be aiming for is higher than what he has invested already. Obviously, depending on the time frame that he has invested in, he's put in efforts, resources, I'm sure, and then raising the same amount of money for half his business. Like you said, sounds unfair to this entrepreneur friend of yours, and they should reevaluate it. And I'm sure, I mean, if there's a product market fit, and if the tech is, like you said, it's almost there, and everything is falling in place, and it's just a matter of launching it, or wherever the shortcomings are, uh, giving away 50% doesn't sound logical.
Yeah, because I felt it a bit hasty, I guess, because once you run out of money, you're like, no, you're scrabbling. You know,
Yeah.
you're trying to survive,
Yeah.
and so that's is there enough time to actually sit down and evaluate and create, find that advisor, or come to Salman and say, okay, how much should I offer? What would how would you go about it?
Yeah, I mean, look, it really, so when you do a valuation like that, obviously you would want to dilute. Uh, you'd probably start your negotiations with your floor of, I don't know, very less than what you actually want to sort of give out, and if the if the numbers stack up, or we're talking about pre money right now, but if basically all your projections of the business stack up, and you could see that your cash flows will be like the cash flows that you expect to generate will happen in actuals, and you will get the cash flows that you anticipate, then I think, yes, some expert or some advisor could probably potentially help you out with that exercise. But again, like I said, if you have invested over a time period, and you've invested certain money, you don't want to dilute your business for the same amount of money just because you're trying to survive, right?
Yeah.
But it depends, right? Like you mentioned time right now. If they don't have the time, and if they are, if there's a bank calling them every single day,
Yeah.
then they will have to find an alternative. In that case, what they do, we'll have to sort of sit down and understand the business better, and then give them a suggestion, a recommendation. But then again, there could be multiple options, rather than just selling off the whole business or 50% of the business for little money. So we'll have to do a financial analysis on that before giving them
Yeah,
a recommendation.
that advice.
Yeah.
Is it because always startups talk about safes and selling equity? When is it a good strategy to actually take a loan instead of selling shares?
So loan is debt is always cheaper than equity, right? So your percentage that you're going to give out in the form of equity will always, you know, it will always hurt you in the long term. Whereas debt, you can always get rid of within a certain period of time, right? So debt is usually cheaper, but at the same time, debt is riskier as well, right? So you don't want to be in a situation like your friend or the other company that you're describing, wherein you're literally running for survival, and you have a deadline
Debt.
from a bank to sort of pay back. So the risks are greater as well. But again, it depends on what stage that your startup is at, right? You can dilute some of the equity if you think that this partner or this VC or this investor will add this value to your business, right? When you foresee that, right, diluting that much percentage for that investor is worth it, right? Whereas if you just think that you want to run the business and you can do it with a leverage, or you can just take up a loan and keep running your business, uh, you would want to also pursue that avenue, because you're not probably yet ready to dilute equity from your market,
Yeah.
from your business, right? And it also depends on what value at that point that you're trying to raise money or raise capital, your value of the business is at. If you're like really initial stages and you've not achieved break even, or you're not profitable yet,
Yeah.
you wouldn't want to raise equity. And it really depends. I mean, that's also very
It's just
subjective.
because you're gonna give more anyway.
You're going to give more
Yeah.
because the investor will say, oh, you're already negative, so
Mhm.
why should I give you this much money for just little equity, right?
Yeah.
So it really depends on which stage that your business is at. But again, having negative profitability or loss making business does not really mean that your value goes down. By the way,
Mhm.
your business can scale up exponentially.
Yeah.
It's just that you're probably at your initial stages, and that's why you're not able to generate that
Got it.
profitability. So the value will be very subjective on the nature of business, the market that you are serving, the contracts that you have in place. There's so many factors that will come into play that you can negotiate with the investor, the buyer, and
Yeah.
say, boss, I'm not selling my business for pennies when I know what the worth of this business is.
Yeah. Yeah. The liability subject, because there are some accelerator or programs that within the UAE that they actually offer you a loan interest free, and there is, that's what I've seen so far. There is the interest free loan, and there is another that will give you an amount for equity, and I've seen that a lot. The equity part is more trending because there's no real liability on you as a person. You don't have to return the money back. But if you're confident about your idea, or actually you went through some of the testing and you see that money, maybe it actually makes sense to go that route, right?
Yeah. Yeah. No, absolutely. And like I said, the equity, I mean, through these programs, I'm not sure if they support the business also. But usually what happens is when you dilute your company and you bring in an equity investor, that investor adds some value to your business, right? He's
Yeah.
not just going to be a person who you don't see at all or you don't talk to. So you can always pick up the phone and you can always ask them for advice, or hatta even have them involved in the operational side of
Operation.
the business on a day-to-day basis. So it really depends. Equity is really useful because it gives you the right people and helps you scale your business at the same time. Leverage that it has its own advantage and disadvantages as well.
Yeah.
So it really depends on what you want to achieve.
Do I need people from your field before I start selling equity, or who are the service provider or the people that can help me through that journey?
No, 100%. Look, if you are selling equity, you're selling the entire business, right? You want
Mm.
to make sure that your business is accurately valued,
Yeah.
right? Especially if you're on the sell side, you want someone who's valuing your business fairly accurately and making sure that all the factors are considered, because like you said, intangibles, these are things that could be missed very easily,
Mm-hmm.
right? So for a seller, what is really important is that he or she has taken an external viewpoint, especially from an expert who knows what the market benchmarks are, what are the comparables today in the market. Otherwise, you'll just be unaware of the real potential, the true potential of your business, just because you're sitting in a remote area and you feel, my business is anyways, I'm just so secluded from the whole world,
Yeah.
and there's no value to my business. Or you might just not consider certain factors which you need to consider. So yes, you can do it by yourself. Yes, you can, depending on how good of a negotiator you are, you can always go and say, even if you want to sell it at 10, you can start at 100. And you
Yeah.
can say, okay, I'm going to sell it for 100. But there's no guarantee that that guy is going to come down to 10 at all, right?
Mm-hmm.
He just feels that, it's not worth more than, 2 or 4 or 5. So in order for you to substantiate these discussions and the arguments with the buyer, you definitely need someone who's an expert who gives you the advice. and backs you with the data that you need to present to the buyers.
So how do I find the person that will do this valuation? So how do I know this company is doing a better job than the other? Yani how do I know that Salman is better than another
100%.
person at this at valuation?
I mean, again, it's the market reputation. It's all about, if you heard about that person or the company from someone. So you put some trust in that organization or that individual, and basically you ask them for a report, for a sample, for some sort of how do you call it, like a credential that could
Mm.
prove to
Yeah.
you that this guy is
What
is
is
worth
that
it.
credential?
Again, the credential can be from someone that
Yeah, yeah,
has used the services before, or you can ask them for a free POC or something that they can
yeah.
show you their value, and obviously then you take an informed decision depending on the budget that you have for creating such valuation reports,
I assume it's
etc.
like consultants, right? So there is a value in getting this report from an accredited big company than a person that nobody knows, right? And because the buyer, it's yeah, is it one of the things that can be presented to buyers? It's one of the things that they will look at.
Yeah, no, 100%. Look, aggregated companies, professionals who are, chartered accountants, chartered financial analysts, people who know what they're trying to present is, backed up by, published data or data that can be relied upon. So these will be from the companies which are well known. Like if you look at a lot of these SMEs, also they use auditors, and if you are as a buyer, if you're looking at a seller's audited financial, that will give you more confidence than just looking at his invoices and his bank account,
Yeah.
because it can be shady, it can be false. So having these kind of proofs and evidences really matter. So you should always, just for a few thousand dirhams or dollars, you shouldn't go to someone who's not reputable. You should always go for the right people, because that's what you're really investing in. So you shouldn't take a risk on that.
Okay. No, that's fair enough. It's a good point. I guess when somebody is selling, or you always, I guess it's part of it is like you try to compare prices out there when you should be comparing reputation, because it helps you in making the deal, at the end of the day.
100%.
So in regards to this transaction altogether, the M&A, what are the things that I should do as a business owners or as a business owner when I want to, I've decided that I want to sell my business today. Uh, do I market it? Does it make, or do I wait? Because there is a lot of, what is the strategy usually people would take? Or what would you advise your client? Says, I want to exit now. Do I right away give the name and we want to get out of the business, or is it, or how do you go about it?
I mean, again, there are multiple avenues to do that, right?
Mm-hmm.
There are some really credible sources, government-led again initiatives where you can sort of market your business. You could go on certain aggregators, certain platforms who have now come in the market, where you can list your business, and you can get genuine buyers for your business. And ultimately, it is about how you list your business also, right? I mean, if you're a confident entrepreneur, and you know that your business that you've run over 10, 20, 30 years has the value, you will have to project it like accordingly,
Mm-hmm.
and not just do a very half cooked job, and make it a very light kind of selling pitch. But your sales pitch should be very sort of aggressive and very sort of to the point.
Yeah.
And you should make sure that you're targeting the right people. At
Yeah.
the end of the day, how you're going to get connected to the right buyers is through these platforms or through these intermediaries who are going to sort of make sure that um you have the right sort of right buyers to sort of invest in your business, right? And yeah, it's easier said than done these days. The markets, I mean, there's a lot
Yeah.
of you can't really trust people that easily. But then once you find that right partner who will help you resolve that problem, I'm sure that you will be able to sell it much more than what you anticipated. So finding the right people, right partners, making sure your accounts are up to date, making sure the data that you provide to them is accurate, and then just hope for the best, I guess, and not sit on it.
Yeah.
Keep actively pursuing it.
Fair enough. Yeah, there is a lot of deals out there to be made, I guess, in the market, and there's always the people that want to exit, but always there's a lot of the people that approach us will say, I want to exit, but I also will accept a partner. I think it comes from the fact that people are worried about getting in relation in such a relationship with people that they don't know. So in an M&A structure, how would you structure a deal that, for example, I have a company and I actually want to sell some share because I want to get more money to invest. How can I structure it in a way that this person that comes in either cannot control a lot or control where it's needed? Yeah. What are the ways that I can mitigate issues of this person coming in?
Yeah, and I think that's a very good segue to the most important part of an M&A deal, which is a legal contract, right? So you will have to make sure that your all the points that you want from this investor are uh, penned down in the contract, and the contract is airtight for you to not have these issues in the future where this partner is becoming more and more controlling, or trying to interfere with your day-to-day operations, etc. So these are the things that obviously can be secured through the contract, but at the same time, what I feel is that uh, it really depends on uh, the the negotiations. When it comes down to the negotiations with the investor, with the buyer, you need to make your objectives very clear, that I need your support in 1, 2, and 3 elements of my business, and outside of this, please do not interfere, because I know my business very well. So these are the 3 things that I need you for, that I need you on board, and this is the amount that I'm going to charge you, and this is the percentage that you're going to get in return for it. Because look, it's not easy to have uh, such structures in place, wherein especially with SMEs, right? It can become a very operationally difficult situation for a business owner to manage multiple partners who don't align with your vision and your objective. So you might as well not do it in the first place, or take different sources of funding rather than just diluting your equity. So I think, yeah, I mean, there are a lot of things that you have to sort of preamble, sort of anticipate, and finally have everything pinned down into a contract which is airtight, and does not allow for any deviation from what you really want
All right.
from the deal.
So Salman, uh, last question. What is your advice to these guys out there that are inspired to start a business or get into or to become an entrepreneur? What
I
would you tell them today? Like something that you didn't know before, or something that you would like everybody to know, maybe.
I think it's a very, very exciting thing to do. If you are, especially if you're very young, if you think that you're passionate about something, whatever it is in life, right? I mean, it can be a software, it can be a product, it can be something that you want to trade, um, anything that you think will work in the market. There is a gap that you see, and based on your discussions with your peers and your friends, you feel can work out, you should take that sort of risk at a young age. But having said that, it's not just that. I mean, anyone who at whatever stage or whatever age of their life, right, wants to take the plunge into the world of entrepreneurship should do that. Uh, uh, just being a bit cautious about the capital that you invest, because when we invest in stocks, we say that, okay, try to invest the money that you can afford to lose, right?
Yeah.
But in a business, you can actually lose everything. So you should make sure that and lose not just your money but others' money as well.
Yeah, true.
So you have to make sure that you don't reach to a stage, and obviously you won't if you're careful and cautious from day one. But my advice would be just do the basics, like I said initially. Whatever I've said, whatever we've discussed across this forum, that make sure that you know the product well, that you are sticking to your core, your fundamentals, and making sure that you're not taking your investors for a ride, or taking
Yeah.
anyone for granted, because customers, investors, the whole ecosystem really matters for an entrepreneur. So as long as you tick all the boxes, I'm sure that it's a great step, and one should definitely do it. Um, and good luck to anyone and everyone who's trying to get on the journey.
Well, I hope we inspired few people to start.
I hope so too.
I hope also we answered some questions instead of giving them more questions to ask. Salman, thank you so much for your time.
Thank you very much. I appreciate it, Hussein, and all the very best. This is a great forum, and wish you a lot of success in the future.
Thank you, and same to you. Thank you for watching us today. I hope you enjoyed our discussion today with Salman. Please follow us on our social media platform and subscribe to our channel. Thank you so much. بس خلاص. Thumbnail. Stay,
Well
stay,
done.
stay, stay.
Stay.
We have